This is Alex from Investary Group, and welcome to part 3 of our Tesla Motors presentation. So in this video, or part of it, I want to talk about the recent quarter and how things have significantly changed in the past year. So here is the operational sheet, and you can tell revenue of the automobile sales. Obviously, that's just the Model S has increased significantly in the year, where you had only, and I'm pretty sure this is in millions of dollars, as I didn't put it in here, but you had 385 to nearly 2 million. So that's a huge shift in revenue, and this is almost more than 4 times the number of in the past year. So that is a significant shift. And with that, obviously the cost for the revenue has also greatly been impacted, right? So that these have direct relationships with each other. With the operational expense, you can break this down. You can see that the R&D number has actually gone down, and this is a huge shift. As we mentioned in the video last year, a lot of that money was already being spent, so it was just on the sheet. It didn't look too well, but it had the benefits in the long term. So you can see that has saved them a lot, but obviously for selling and general expenses has gone up. Obviously, when you sell more vehicles, that's going to happen. But this operational expense is significantly lower because they put that R&D cost before. And that this is one reason, this is a key element of the success at Tesla. And you can look at the numbers below here, but this is the main thing I wanted to highlight, was the revenue change, the cost of revenue, but also the operating expenses, how that hasn't changed as significantly as one might think it would. So with the balance sheet here is their balance sheet the assets has doubled. And here you can see inventory has increased. This is a huge factor, not by too much, but this is a positive trend. The property and equipment has gone up. Last year or the year before, had huge operation. They spent huge money on the property and equipment, and now they have increased some of it. So that's important. Cash is definitely key. Tesla has a lot more cash in hand, and they can do a lot more, and that's why they have the Gigafactory that we're going to be talking about next. So yeah, here's just some important things. One thing I want to highlight on the liabilities part is the deferred revenue, and that just means the money that they're getting is going to be backlogged a bit. So this is a huge number. That's primarily due to those reservations and stuff, and that revenue isn't on the current quarter. So yeah, this is just something I wanted to show you guys. And again, this is the most recent quarter that they posted, and the cash flow has been good. Definitely, you can tell for the year they were cash flow negative in 2012. They turned positive, turned it around by almost reversed. And yeah, and the revenues here for the Model S deferred due to lease accounting. You can tell the numbers have significantly increased, and the gross profit, this number, huge increase as well. Positive trends in almost all areas. Research and development gone down. Again, this was primarily due to most of it being spent in 2012. And so you have positive directions in all three categories. You want this one to be down. This one is generally going to be up due to the fact that you can't really avoid the selling and general expenses. So some brief technicals of the charting of the past several months. The RSI is near record levels, usually past 70 means it's at an oversold level. So some technicians do believe it's overvalued, overbought at these levels, and it's been oversold. At this point when it was 125, that was a very good entry point for many technicians who saw that. But the 5-day, the moving averages has all been pretty good. You can tell the longer the moving average, the lower it is because of the huge run that it's had. But the trend is continuing up in the long term, and the 5-day moving average, it's meeting that level right there. But in the long term, the technicals look pretty good. And here's just another chart, a rundown of things. The 200-day moving average, again, straight line across. We can expect that to continue with the current trend, and all these lines are moving upward. So the technicals for the long-term perspective still look pretty compelling. So the biggest question is Tesla worth investing in? It has a high valuation, and what we're saying right now is we would highly advise anyone who does not have a position in Tesla to wait for a pullback or some type of pullback possible, so you guys can, if you are interested in investing in the long term, that's what your strategy would be. And the long-term story is still very compelling. You just saw through, if you watch part 1 and part 2, how much Tesla has changed in a year, and a lot of the risk has been taken out of the equation from a year ago, and that's why the stock price has gotten higher. And Elon Musk has really delivered something unbelievable that used to be just coming out of a dream. He made it possible, and now, is it worth investing in? That's up to you guys to decide. But overall, we still believe in the long-term story, and we think that the valuation is justified. For the high valuation is justified with the growth that they have put in. Now, I really want to talk about this Gigafactory, and this is something very important. The Gigafactory, and this is from their website, is to reduce cell costs much faster than the status quo by 2020. Produce more lithium-ion batteries annually than were produced worldwide in 2013. So they're trying to beat the whole worldwide production of it. And this is something that's huge, and it's an example of how Tesla is thinking of the long-term picture. The Gigafactory here is a really good chart explaining what they're trying to do. They want the Gigafactory to produce all of these cells. And you can see that these are all, the makers of the battery of this, of the cell, the lithium-ion batteries. They're trying to meet that by 2020, and they're putting in money. This is where the cash is important, and they're trying to meet that in order, because they use this battery pack, a lot of lithium ions for their models, for the Model S, and the Model X is going to be the same. So this is forward thinking by the Tesla management team. And the Gigafactory right now is a model of what it's going to look like, and they're getting about approximately 6,000 employees working on producing these battery packs, and it's going to be a huge operation. It's going to support up to 500,000 Teslas a year. So this is a major operation, and right now they've factored California out. They're looking into Nevada, Texas, New Mexico, Arizona for the site selection. And the process of this is they're going to probably choose somewhere sometime this year, get the project design, talk about partners, and this is a very, very well constructed plan of what they're trying to do. And Tesla said they're investing $2 billion directly into this. And this has made a lot of investors very, very happy of the forward thinking that happens at Tesla. So the growth of Tesla is seen through the Gigafactory. You can see not many companies think so far in the future. And this growth is strong. It lowers the price point further. The economies of scale is going to be further, will be more visible even further. And it's allowing them to reach a greater consumer base when they want to make the Gen 3 product or any other further models and need to reduce the cost. The battery pack is a huge cost for them, and this is a way for them to achieve that lower cost vehicle that they have. So this is huge key on the part of Tesla, and the thinking for this is definitely innovative. So our numbers rundown comes to this. So we're seeing about $4 billion in revenue for this year. And yeah, again, it's just the Model S. Right now there's approximately 10,000 reservations of the Model X. That comes to a $50 million down payment, as the reservation is $5,000. And then they said that the signature is $40,000 reservation, although I haven't seen much into that as much. But yeah, it's 50, maybe give it, $50 to $75 million in down payment. $1 billion profit estimate is from our part. We see about $7 to $8 EPS for this year. That's about 35 times forward earnings. And if you think about it, the market is right now near 17, 18, so it's double that amount. But the growth obviously is more than double the average market. And so this is a very, if you look at it from this perspective, the stock does not really look that, overvalued, I would say. And assuming that the Model X has about 85% follow through on its reservations right now, that's going to bring in $600 million in revenue. And we're calculating that the Model X is going to be somewhere between 65,000 to 75,000. They haven't announced the actual dollar or price point for the Model X, but that should be where it is. Again, that's excluding the government incentives that they have. I think the program is still going to stand at where it is depending on which state you're in. And the Model X will definitely get more reservations as we get to the launch of the product, and over the years that the reservations are expecting to pick up just as fast as the Model S. So the Model X is definitely something to look forward, and this is why a lot of investors are hoping that the Model X does not get pushed further. Last year, the reason for the Model X to be pushed back is because of Tesla wanted to focus on profitability. So it's understandable for the pushback. And the Gen 3, they want to start that price around $40,000 to $50,000, and this is going to be key. Obviously, the Gen 3, we're not even going to be talking about that until 2016, but it's expected to outpace both models, the Model X and Model S, because of the performance that they have. So our sentiment is we have a outperform rating on this company, and we are saying that the execution risks has been severely reduced in the last year. There was a lot more risk going into this company last year than this year, obviously, and we don't have a strong buy. As you can see, we don't have a strong buy rating on it anymore. We think it's going to outperform the market, but it's very hard to tell you guys that it's a very good buy right now, because the price is fairly, I would say it's fairly valued, is our perspective. And obviously it's subject to market conditions. Growth companies tend to be very, it's very dependent on how the markets do, the general economy. And we think the revenue that we just talked about is a bit conservative, or the estimates for analysts is a bit conservative. So that's what we think that the $4 billion is pretty conservative, and it can be easily met next year. And Tesla is a company that when we look at it, it's very hard not to be bullish on it, because of the fact that there's not a lot of companies that you see have such a visionary future, and that's helping the environment side, and just the vision of the company is something you do not see. It's something very like Apple when they announced their iPhone and iPad. There's obviously execution risks, but if you had to announce several companies with this type of growth, it's very hard to see pick out any company that has this type of potential. And we also do believe that a takeover is not likely, but multiple partnerships with other technology firms and is very possible, as Tesla is a lot technology and a lot automobile. So they're combining both of these industries together, and we think that partnerships is most likely what is going to happen. So we are re-changing our price target, and our 5-year price target is now reamped to $550 a share. And again, we think this is a very, very conservative amount. And how we get this price point is, it's going to be about $70 billion market valuation, assuming there's no more dilution of the shares. There's about 120 million share count as of now, and we see the model as continuing to expand. As long as the consumer market is strong, the Model S will be able to sell beyond that 35,000 for this year, and hopefully into next year it will be even greater. The Model X, we think, has a lot more potential that's unseen. As more details come out, the Model X is definitely going to have, we think has a lot more potential for that Wall Street still, that's not put into the price target yet. And Gen 3 is definitely going to be huge. This is a truly mass market vehicle, and we really believe that this vehicle is going to change. It's going to be a revolutionary product. So revenue over the next 5 years will easily beat the $10 billion range, especially when you have Elon Musk saying that they're going to reach 400,000 cars in the next 3 to 4 years. $10 billion this is a very low estimate. It can be 20 to 30 billion dollars very easily. But again, it really depends on the macroeconomic situations. And as a disclosure, Investary Group still owns a position in Tesla. We will say that it's not as large of a position as we built up from last year, but we are holding strong on this company. And this, again, is part of that 2-year commitment plan that we announced last year. This is a continuation of that. We still have 1 more year to go for this. But yes, that's part of our commitment plan. And as always, please do your due diligence before making an investment decision. Again, this is just our opinion on this company, and by no means should this should influence you too much on it, I hope. So that was our presentation. Just some facts that I want, some additional information I want to run by is all the sources that we've used is going to be in the description as always. You can voice your opinions in the comments if you have any questions, feedback, any of that type of stuff. Leave it in the comments. You can follow us on Twitter and Facebook. And please check out our Investary Group website. We're going to make some website changes, but we're trying to get our latest written articles, and hopefully we can put our PowerPoints up on there so the public can view our PowerPoints from the past and this one. And as Tesla has expanded, so have Investary Group. So we have some, if you're interested in any job opportunities, you can always email us at investarygroup@gmail.com. And right now we're looking for technicians and other investors out there, analysts that are interested in this opportunity. And if you're interested, you can do that. And we're going to be making some educational tutorials, continuing that process for our channel this year. So yeah, there's a lot of exciting stuff that's happened in the last year, a lot more to come for Investary Group. And I want to thank you guys for watching this tutorial. This was a very long tutorial. I want to thank all our people who put their time and effort into making this PowerPoint and making Investary Group succeed. We had a huge increase in the number of people interested in working with us. We have a strong team that's couldn't be any better. And so we want to thank you guys for watching. Be sure to subscribe, and yeah, I'll see you guys in the future. Have a nice one.